Good evening to all. This is Umar. In our previous video, we said there might be a limited upside due to weak global cues, and on Wednesday night, US markets were all in the red. Dow fell almost 600 points, and I started to panic since I was having good number of positions and due to Eid holidays, and it was really hard to even sleep. Then yesterday, after seeing some green in the US futures and recovery in the Asian markets, I could relax. That is the amount of pressure market will give to a full-time trader. You will not know what will happen. We can bear whatever happens during the trading hours, that's manageable, but overnight gap up or gap down is something very hard to manage. But there is no other way. It is part of the trading and we have to go through it. And if you see the markets after opening in positive, Nifty was in the red for most of the trading session. Nifty closed showed some recovery from the day's low and closed moderately lower, extending the losses for the third day. All sectoral indices apart from FMCG closed in the red. I feel today's low, which is 14,590, should be the level to watch in the coming trading session. If we can hold these 14,550 levels, then we may see Nifty going to 14,800 or 14,900 levels. And as of now, I am neutral on the long side, and I will short the market or sell more calls if the market breaks today's low, which is 14,550. And if market breaks 14,550 levels, then we can expect the market to go to 14,400 levels. India VIX moved up by 0.93% from 20.08 to 20.26 levels. And if you see the Nifty chart for the last 3 weeks, it has been trading between 15,000 and 14,400 levels. Nifty has to break either 14,400 on the downside or 15,000 on the upside to make a meaningful move. And these are the excellent times for option sellers. I am sure the straddles would have given them good profit. And if you see the options, maximum put open interest was seen at 14,000, followed by 13,500 strike, and maximum call open interest was seen at 15,000 and 14,800 strike. And today call rating was seen at 15,1000 and 15,300 strikes, while put rating was seen at 14,650, then 14,500 strike. Now this clearly shows Nifty's trading range is between 14,400 to 15,000 levels for coming trading session. And this corona situation is getting worse day by day, and nationwide lockdown is not priced into the market. If there is an announcement of blanket lockdown, then we can see markets going down. The current approach India is taking to curb the virus at the state level restrictions on non-essential services rather than a blanket nationwide lockdown suggests the impact is likely to be limited when compared to the last year. And if you see the FII data, FIIs have sold for 2,607 crores and DIIs have bought for around 600 crores, and still FIIs are net sellers. And I have been saying, without the support of FIIs, markets will never go up. So that's it for the market. And coming to our trades, if you are following this channel, you might know that we do a trade on weekly basis. Last week we did a iron condor, and this week in the sense last Wednesday, last week trading, last expiry, that is on Wednesday, we did a iron fly. So what we did is we sold 14,750 call and put on 20th expiry, that is 20th May, and we bought 15,100 call and 14,400 put for protection. So that becomes a iron fly, right? And today what I thought is maybe upside is limited, or as we predicted, as what US market showed on Wednesday, maybe there could be a significant drop or anything can happen, right? So I thought to limit our losses or to protect us against any fall, I thought we will buy 15,000 call. So today morning I bought 2 lots of 15,000 call on 20th May expiry. So we have 4 more trading session, and actually the original Ironfly itself is in the profit only. It's in the profit of around 4,300 or 400. So the the call which we sold 15,000 call is also in the profit of minor profit of around 260 rupees. So what will happen next is, in case even if the market gaps up on Monday, this trade is going to be in a good profit. If it gaps down also, no problem, because we have protection, right? We have sold additional calls. In this case, if you see, I have sold 2 lots of 15,000 call, and if you see, maybe I will show you the this payoff graph. This one, if this trade, if it crosses below, if it goes below 14,500, there will be minor loss. Earlier the loss was, say, maybe around 15,000. Now the loss would be around maybe 7,000 or 8,000. So this is one type of adjustment. If you want to reduce those adjustment also, if you don't want to make 7,000 loss, you could sell more calls. Maybe in this case, where I have sold 15,000 call, 2 lots, if I had sold 4 lots of 15,000 call, maybe that loss will also come down. So this is just a sample of things, how things work here. And even if it crosses below 14,500 on Monday morning, it is going to be in a profit only. So we'll exit the trade on Monday. Maybe on Monday we'll see how market pans out, and we will exit the trade. On the downside, I am planning, if it crosses below 14,500, I will exit the trade. And on the upside, if the market moves more than 14,700, we are going to exit the trade. So that's it for today. I hope you enjoyed this video, and thanks for watching, and see you tomorrow. Thanks. Bye.